Now, what if it's not moving upward or downward? Okay, so we got 20. TJP started off at $20. It went up to $21. It went down a little bit to $19.90. Went up a little bit to $20.80. Went down a little bit to $20. Went up a little bit to $21.10. Went down a little bit to $20.10. You see how you can't tell if that's moving up or down? It's just moving sideways. It's moving sideways. There's no clear indication if this is moving up or down. It's called either sideways or range bound because it's within a certain range, or consolidation. We know that consolidation means kind of packed together. So those three words can be used interchangeably. Sideways, well, within context. If you're talking about the market structure, sideways, range bound, and consolidation can all be used interchangeably because it's all within one area moving at a sideways pace or direction. All right. So it generally means price is hanging around an area rather than clearly trending upward or downward. Because looking at this graph, you can't tell me if this is moving up or down. It's literally looking like, I did this so good. It's literally looking like it's moving sideways. Hence, a sideways trending, or a sideways trend, or sideways structure. All right. And just know, the stock market can be messy like this. That's why you need context. Because I can't look at these and be like, oh, I feel comfortable jumping in and making a profit. Or I feel comfortable knowing that I'm not going to lose. You can't know. I need more context. Now, here's a major beginner trader mistake, all right? Suppose TJP is in an upward trend, right? All right. And then you have higher high, higher low, higher high, higher low, higher high. You moving up. We got some high highs, some high lows, some high highs, some high lows, some high highs, right? All right, and then suddenly you see one red candle. One red candle come in after you've been on an upward trend. As a beginner, you might think, oh my gosh, the upward trend is over. I need to sell everything. I need to hurry up and get out of there. But then that's not necessarily true. All right, because remember, one candlestick does not tell the story. It does not tell the market structure. It does not tell the structure for that stock. One candle is only one piece of information, one word in the story. All right. At that specific time or particular time for that candle, it showed a downward trend. That's why it was a red candle. But that don't mean the overall trend or structure of that stock for that day, that trading day, is in a downward trend just because it was one red candle for a specific time. That's all I'm saying. And remember also, price doesn't generally move up or down in a straight line. You might have some pullbacks. You might be at $10. You go up to $14. You come down to 12. You go up to 16. That 12, it pulled back a little bit. That don't necessarily mean that it changed directions and now we're in a downtrend. All right. One candle does not equal structure. It's just a piece of information. Okay. Now, I just introduced pullback again. So now we're going to talk about it. Pullback is, in a kid version, it's a temporary move against a current upward move or trend. So just how I said, to go from 10 to 14, down to 12, up to 16, that 12 is a pullback because that price was moving upward, but it pulled back temporarily and then shot back up. It's like rubber band action. But you can't look at a candle, you can't look at price traveling up and then not let the whole time frame go. Like in that last, hold on. All right. In this example here, I can safely say that 10 went to 12, it went to 11, and then went back up to 14. I can safely say here that 11 is a pullback. Why? Because it went from 10 traveling up to 12, pulled back to 11, but shot back up to 14. Then it went to 14 and kept going up to 16 and came down to 15. But I can't safely say that that's a pullback. Why? Because I don't know what happened after. I don't know what the price did after it stopped here. I don't know if I still have more time in that candle or in that time frame. I don't know if it's going to, if this was a pullback and it'll go up to 17 or 18, you know, go up higher. Or I don't know if it might go down to 13, 11. Then that's something totally different. That's a reversal. And we'll get to that. But a pullback is simply the price just decreased a little bit or decreased, but it started moving right back up in that upward trend. That's a pullback, a temporary move against the current upward trend. And since we talked about the pullback, we're going to talk about reversal, because just like I said with this 15, a pullback could easily turn around and become a reversal, because after this 15, it could turn and start going down. And now we might be in a downward trend and we done reversed the structure. Instead of it being in an upward trend, because you could clearly see it's moving up, up, up. And we stopped at this 15 and it could start going down, down, down. That makes it a reversal. A reversal means the price changes direction in a meaningful way. And that meaningful way means, hey, we was watching this travel up, 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 and now it's going down and it ain't traveling up no more. It's meaningful because it's done changed directions. And now that's the context that we're looking at of that structure. All right. Now, market structure helps us distinguish normal movement within a trend from evidence that the trend may be changing. All right. This is where it can get tricky. You got a 5-minute chart that looks like it's in an uptrend. But then you can look at the daily chart for that same stock and it could be in a downward trend. Because remember, the candles or the charts are only for a specific time. So yeah, maybe in that 5 minutes it was traveling upwards. But remember, we can have pullbacks that can directly turn into reversals that can make it into a downward trend. So throughout the day, it could have actually been traveling down, 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 down. But then you maybe had 5 minutes where it looked like it was going to go up, or it looked like it was in an uptrend, and then it started shooting down again. And that overall daily chart is a downtrend. That's why I said only one candle is just one word in the story. One piece of information. What happened during that 5 minutes that it shot up? What was going on? What information came out? What about that stock made it shoot up into an uptrend? But then afterwards, what happened that it resulted in the daily stock being in a downward trend? Everything is about context. Everything is information. Take in every piece of information that you can to make an educated guess, because this is all probability.